Hey, everybody. Welcome to the game plan. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, a lot to discuss. The markets are up today. Now, remember, anytime you have a light volume week, which is around a holiday, the bias for the markets is always going to be neutral to positive. Now, to explain this, let's talk about what's going on in the underbelly of the market. So you have the politicians that generally want to push markets up into a holiday to get people spending. Remember, Black Friday is coming up here very quickly. So again, with the markets basically at all-time highs, people will be more apt to spend. It stimulates the economy. Then you also have situations where the big investors and traders, the institutions, they basically take these weeks off. They don't really trade much. Maybe if there's big news, they'll be involved. But aside from that, they leave their underlings, kind of the second in commands, in charge. And the second in commands are basically told to just keep the status quo. Make sure there's liquidity. Make sure there's stuff going on here. So essentially, you don't have big buyers or sellers from the institutional side, which then takes us to the retail investor. The retail investor loving the markets near all-time highs. They're going to be buyers in the market, and that gives it a neutral to upside bias. All right. Now you have the catalyst today. The big news over the weekend was that Trump nominated the new Treasury Secretary to be Scott Bessent. Now, he is a hedge fund manager. He is a friend to Wall Street. So if we looked at what Elon Musk was hoping to put a disruptor in this spot. He even tweeted about it on X. Trump went with the old school, going back to favoring Wall Street, and that is why the stock market is rallying today. So if we take a look at the S&P here, the spiders on a pre-market basis, what do we have? The market's again up at 4 in the morning right here, and we traded neutral to higher and then have just seen a nice little additional push. Look at where we went, right here, 600. Look, we just touched 600. That equates to 6,000 on the S&P. Now, what's interesting about this is if we go to the daily chart, where is that level? It's basically right here. You're at essentially double top. So you're at double top all-time highs, or essentially hitting that all-time high on the SPY or the S&P tracking ETF here, essentially the S&P 500. All right, now the key is understanding what goes on here, right? So when you have positive news like this, it means that we see yields falling. And what we know about the stock market is that the stock market craves cheap money. They crave lower interest rates, all right? So if we look here and we go back to the chart of the 10-year and flip to that, we can see that the 10-year yield is pulling back on the day. So that's a key factor because, again, it goes hand in hand. We know the stock market loves lower rates. It wants lower rates. That means money is cheaper. We also know that this pick of the Treasury Secretary is going to be a friend of Wall Street, which is the catalyst for yields going lower, right? You don't need the safety trade or you need more of that lower rate factor because, again, you're not going to see as much disruption, which is why yields were going up with the U.S. debt where it was. All right, so interestingly enough, from a technical perspective, and remember, folks, I'm a technical trader, but I try to explain the news to you guys because I want you guys to have a clear picture of the result, right? So we can see this in the charts, but then this is the resulting news that triggers that move. So if we look here at the 10-year yield, what do we see? Well, we knew we were rallying into what's called the scene of the crime. If we zoom out on this, we can clearly see an upsloping trend line, a downsloping trend line. Here was your breakdown. Look, you hit it. Well, you really hit it back here a couple times. Then you went up to the high again. Each time it hits, it weakens this trend line. Eventually, that trend line gave way. It shattered to the downside, and we retraced to the scene of the crime. One of my favorite trade setups is this trade setup. And in fact, I bought the TBT with members of Smart Money Stocks and ETFs. We're obviously up on it at this point based on the fact we got in right up here on the TBT, which again is basically when you buy the TBT, you're inverse to yields, right? So if yields fall, TBT goes up. And you can see today yields are down sharply back to 4.316%. So again, isn't it amazing how, the chart was telling us that yields were going to come down. We didn't know necessarily, was it going to be weak economic data? Was it going to be something else? Was it going to, what was going to cause yields to drop? Well, guess what? We just got the news that caused yields to drop. It's one of the things that I always tell people, and people look at me like I have three heads when I say this, but it's understanding that in a weird way, the charts predict the news. Now, that doesn't tell you exactly what the news is. It just tells you that something's going to happen that's going to cause a drop in yields, and that's exactly what we saw right here. Very, very cool stuff. All right, so yields should continue to come down. That'll be neutral to positive for the market as well. If we look at the US dollar, remember the dollar is a safe haven asset. So now that you have a good old brother in the, in the treasury place, and I mean brother to Wall Street, a buddy, the big buddy, the big billionaire type, more multi-millionaire types that are going to be heading the Treasury Secretary. This essentially, and again, part of me is like, oh, I wish he didn't make this pick, because I do believe that there has to be reform. And this is basically that, you're getting someone who's the old guard, that's going to be a friend to Wall Street, that's not a disruptor. And we're seeing the dollar coming in as well, because again, there's no need for a safe haven of buying dollars when you have someone in the treasury place that's going to be like everyone prior to them, right? That they're going to be a friend to Wall Street and do these same sort of things. So the dollar pulling back, but look at the technical level again, double top, highest point over the last year, actually going back to 2022, actually the highest point on the dollar in 2 years right there. And there's your pullback on the US dollar. Now, many people would say, oh, well, shouldn't gold be ripping up because the dollar's pulling back? The answer is no. Gold is actually down sharply today, down about $43, because again, if it's risk on in the markets, what's the point of holding gold, right? And obviously I believe that you should hold gold. Granted, I was short or going into this high pivot, then we were long. I took my GDX profits off the table on Friday, and you can see the resulting move. Notice the midpoint of the channel, and then we pierce the midpoint, boom. The other thing to just point out here, folks, is that if you look at this, if you know the methodology that I teach, that I created, the PPT methodology, you have a time count, right? 1, 2, 3, 4, 5, 6, 7. That tells you a high probability of a reversal trade here on gold. And don't forget, folks, that I will be giving out a coupon code on Wednesday. It'll be good through Sunday for 50% off the Winning Trader series, where I teach this, the confirmation signal, and there's 20 hours. I mean, it's a 20-hour course, so it's about as intensive as it could ever be. But beautiful pullback on gold. Again, I unloaded some of my gold longs right up here. I still hold a few miners, and I'm actually eyeing a new miner in the commodity service that I actually think is going to be a no-brainer here for a big move to the upside. But again, I'll put that out to members later on. All right, so where could we pull back to on gold? Well, the question is, do we reattack this level here, or do we just make a bull flag? So what we have to do as a technician is say, hey, we don't know yet. The chart has not given us enough pieces of the puzzle. We need to see more price action to know, are we headed here? Are we going to break down, or are we going to make a bull flag and then go to the high end of the channel here? One other chart I want to show you guys. This is a pretty wild chart here. We're going to go to our big time frame here on the Dow. Where's the Dow chart? There it is. All right. So I was doing research over the weekend, and this is fascinating. And I was looking at how much the Dow is up over a 15-year period. So we're talking about from the lows of 2009 to 2024 highs. We're up 583% on the Dow Jones Industrial Average. I looked back historically, and there's only 2 other times that in a 15-year span, I found that the Dow was up 580% or more. And I want to show you, because I do think it just puts it in perspective. So if we look here, if you look at the 1987 crash here in 1987, right, where the Dow dropped 20+% in a day, we had a low here, and to the high of the dot-com period right here, well, in 2000, the Dow was up 625%. But remember what followed that. The Dow ultimately had a big drawdown of, let's see here, of about 40%, okay? The only other time in history going back to the U.S., in the U.S., was in the roaring 20s. So if we look at the roaring 20s, from the low of 1914 to 1929, a 15-year span, the Dow gained 650%. What happened after that? It dropped a whopping 88, make that 90%. And so my point here is that, listen, we don't know if the Dow, so right now, to be fair, if we go back to current times, the Dow is up 583%. All of these other periods were up 600 plus. So we still could go up a little bit more. Don't get me wrong. There's easily another, maybe 1,000 points up in the Dow. Heck, I think the futures are up 350 points right now. But the point being is that following these periods in history, there is usually a major correction. Whether it's 40% or 80 or 90%, we don't know. But I do just want to just point this out. I'm all about data, right? Data tells us a lot. It just warns us what there could be on the horizon. And I want us as an educated investors that focus not on emotion and not on fear and greed, but on data, to just be aware. Just be aware that it's unprecedented. 2 other times in history, we've had a 15-year span in the Dow that has gone up, 580% or more. And we are in one right now. And the prior one was the dot-com bubble. And the prior to that was essentially just before the Great Depression. All right. A couple other charts making moves today. Tesla is moving to the upside here. Nice move, trading at 362. The high from last week was at 361. So we are just breaching that high. If we take a look here at the chart, I was looking at a possibility that Tesla could go to double top. I actually think there's a chance it could. The reason I think it could is because I have a confluence of trend lines. Look at this, guys. Look at this. All right, check this out. And I love this is my favorite part, playing connect the dots like I'm a kid again, connecting pivot points. This is your low here in 2020. This was your COVID low. If you connect that through this low here to this high and this double top, they merge at double top on Tesla. Wouldn't that be something? And really, to be honest, it's only about $50 away on Tesla. It's not that big of a move. I mean, heck, we've seen Tesla move $40 or $50 in a day. So just keep it in mind that this could be a possibility that Tesla goes up to about 415 to 410. And at that point, you'd have a dual factor to pull the trigger on a short trade. Remember, I'm a swing trader. I couldn't care less where Tesla is in a year from now or in a decade from now or even in 6 months from now. I'm looking for shorter term swing trades that are going to net me 10, 15% moves in a week or so on trades. Bath and Body Works having a big move pre-market. Look at this move up here. Earnings were reported this morning. The stock ripping to the upside, up about 15 to 20% here, trading at 37.50. The question is there a level? First and foremost, notice the chart was at the low end here. This is actually a very nice pattern. I think this is one that Dr. B would refer to as an Adam and Eve pattern. But the point being here is you have this consolidation right here coming off of a V bottom. This is a great setup. V bottom, essentially a cup and handle pattern here on the charts. And again, right now it's trading right up here. In terms of a shortable level, this could be a short squeeze candidate, so do not short it too early. The first level I would have the guts to short it at would be around 43.50, which is still quite a ways away. It's trading around 38 right now, but don't be surprised if it gets up there, folks. But you can see very clearly pivot low, pivot low, pivot low. Therefore, a retrace into that level could be a good trade level. Palantir is making a move up. These software stocks in the AI zone are very, very hot right now, while NVIDIA fades, right? We have NVIDIA, which fell on Friday after the earnings, kind of was flat on earnings and then came down afterwards the day after. But one of the things I was noticing here is there's a great parallel channel here developing on Palantir. High pivot, matches perfectly with the low pivots here. There's a trend line right up around 67.75 to 68. That could be a short-term high on Palantir. And again, just to put this in perspective, Palantir from the August 2024 low is now, based on where it's trading pre-market, I think it's at around 66 or so. It's up 210% since August. Incredible move. All right, next up, let's look at Bitcoin, guys. Bitcoin still has not broken 100,000 here. This is your daily chart on Bitcoin. You can see it's starting to make bullish consolidation. I want to be clear, as of now, probabilities still favor a break above 100,000, especially as it builds a bull flag base here. Now, I did some research over the weekend on where it could go. Is it going to pierce by $100? Is it going to pierce by 1,000? Let's go back to the chart and take a look at where it likely will go to. What I did was I was researching here, right? And of course, I'm drawing trend lines and trying to figure things out. And what I found is remarkable. So you have, if you take the high from 2017, you connect it through the high of 2021 in March. It connects perfectly to the high in November of 2021. You drag a parallel down, right? Drag the parallel down. You can see, again, this is a parallel, right? So you drag it down here exactly to these lows right through here. And that should give us a tradable level on Bitcoin to short. So I think Bitcoin, as of now, you would assume it will eventually, whether it's today or tomorrow, break through 100K. It then could go as high as about 107 to 108,000, which would get all the bulls thinking it's going to 150. Then I would expect a bigger pullback on Bitcoin. And again, all we're doing here is using the charts, right? So basically, it's not our job to try and reinvent the wheel. As a trader, we look and say, okay, off of here, it had a big pullback. Off of here, it had a big pullback. Off of here, it had a big pullback. So if it hits here again, you would anticipate a decent sized pullback. Now, where would that pullback potentially go? I would lean towards 75,000, right around the high pivot here. There's also a little bit of a trend line. If you take this high and connect it through, that's right around 75,800. So somewhere in that 75, 74,000, 76,000 range. That would be a beautiful retrace. That would be an absolute buying opportunity as a trader here on the charts of Bitcoin. All right. So again, for me personally, I'm looking to potentially short 107, 108 if it gets there. And then on any sort of pullback, I would be a buyer at 75, give or take. All right. And remember, it's just the charts. The charts guide me. It has nothing to do. I couldn't care less about Bitcoin one way or the other. I'm a trader. I'm looking at shorter term moves. What's the next move? Where can I get in? Where can I go out? Etc. Silver today. Silver's kind of an interesting chart here, guys. If we look at the daily on silver, look at this. So let me refresh my chart so it gets bigger here. Here's your pivot low, pivot low, pivot low. You broke above. You confirmed below. So here's your close below. You didn't confirm here. You confirmed the breakdown right here. All right. This is, again, something I teach in the Winning Trader series. Don't forget, 50% off coupon code coming on Wednesday. I'll give it out on Wednesday. What this tells us is that once you confirm below support, this line becomes major, not minor. So when you get below, this is minor. This is minor, meaning that it can break back above very easily and often does. Once it confirms, it means it's much more, it's a stronger major resistance. Sure enough, up, rejected, up and rejected. And that continues to have me favoring a move on silver potentially down here. All right. So again, we'll have to watch and see, but don't be surprised if silver comes down into that range. Another great one here, guys. We got to talk about natural gas. Natural gas, guys, I've guided you on my trades. I literally gave you this trade ahead of time in this game plan or trading the close. I've talked about it in both free forums of my shows. And I said to you guys, when you get up to 355, you start nibbling on the short side. I did that with members, both of my commodity service, Smart Money Commodities and Smart Money Stocks. We took profits on Friday in both because the pullback was so big. And I always say to people, don't look to give horse in the mouth, right? If someone gives you a horse, you're not going to be like, oh, but the teeth aren't great. I'm not going to accept this present. You say, okay, awesome. You know, this is found money. So I took profits on natural gas with both member services on Friday. And sure enough, was that the right move? All we can see is natural gas up over 5% today, almost back to that same level. So now if I really wanted to, I could almost reshort at the same level. As of now, I don't. I want to wait for it to get up to this level at 365. If I miss it, so be it. But it just shows you how aggressive swing trading can really net you profits, where you took it off the table on that pullback. You had the exact high right here for a short, boom, grab it, and then right back up it goes. And you say, thank you very much. Love that stuff. Now, lastly, oil here, folks, as we go into oil. Oil not doing a whole lot, pulling back a little bit on the daily chart, but it just continues to languish here. And again, the only thing I'll say on this is, first of all, I would be a shorter at $75 a barrel if it gets up there. Aside from that, I still continue to be very concerned the way it keeps hammering based on technical analysis. The more it hammers a trend line, the weaker that trend line becomes. And if we look at this level has held basically since 2021. And so if this level breaks, what do we know? We know that we should have a bigger move down. Now, don't think it's going to go to 35 straight out. I want to be clear on that because some people are crazy out there that watch me. They're like, oh, but it didn't get to $35 in 3 days. I can't believe Gareth was wrong on that one. No, what this is saying is that this will begin its march towards this level. It'll have bounces along the way. Like, for instance, right here, pivot low at 57. There should be a bounce there. Here's a level at 53.70. Here's a level right here at 43. You know, my point is that this break will be a significant break, but it will take time, probably 6 to 12 months before it gets down to this level. But again, if we look at this, it's a great, let me go to my bigger time frame here. Let's go to your weekly so we can see this. Look at these two trend lines converging. Pivot lows right along here, Pivot highs down here, they're converging right around 35 a barrel. That's got to be, at least in my opinion, that's the most probable place where this is likely to go. All right, guys. So great start to the week. Markets are looking positive here. I filled you in on all my technical knowledge here. Again, it's awesome. Don't forget a couple things. Number one, the 50% off coupon code will be available on Wednesday for the Winning Trader series. It'll last through Sunday, so it'll have just that Black Friday. Then there'll be no sales on that after that point. All right, next, what we're going to do is on Friday, I'm going to be live in studio with my other traders as the markets open for the first hour of trading, and we're going to be trading live with you guys here. So again, that will be instead of the game plan on Friday. Friday is going to be a quieter day, so the live trading room will be closed that day. It's only a half day anyways, and we're going to do it live on YouTube so you guys can tune in and watch for any potential trades. There may not be any trades because it's going to be a slower day, but if there are, that'll be a lot of fun. And also you'll hear how we work together, how we scan all together. And that will, again, it gives you insight into how a trading room can function and actually benefit each other, where we all together catch many more trades. Interesting little note here. I used to run the morning session in the live day trading room for the last, since 2007, by the way, I've had the live day trading room. Crazy how long that's been. But for the longest time, I used to run the morning by myself. I would catch 1 to 2 trades on average a day. Now, we probably average, I think last week we had a day where we had 9 trades. We had a day where we had 8 trades. Because I have 4 traders in there, total of 4 now, there's just so much more action because I have more eyes scanning. And then members are pointing out trades as well. It's a very, very cool thing. It's, again, the Apex live day trading room. But on that note, guys, I got to get to the live day trading room because we're going to start trading here in about 8 minutes. Thank you so much for tuning in. I appreciate all the kind words, guys. I really do. And I'll talk to you guys soon. Take care.